Today we are going to look at IFRS 5, non-current assets held for sale. So this standard will tell us how to present any assets that the company will sell in the foreseeable future. So that will be within 1 year, and those assets will be separately presented on the face of the statement of financial position as non-current assets held for sale. And there's certain rules in respect of the measurement, and it will also tell us how to know when a non-current asset can be classified as a non-current asset held for sale. Please ignore discontinued operations and disposal groups, as we will deal with that in CTA. Okay, if we look at the overview of IFRS 5, we will look at the introduction, when does it apply, the scope, definitions, classification, when must a non-current asset be classified as a non-current asset held for sale, then your measurement, so at what amount should it be in the books, and then how will I present and disclose this non-current assets held for sale. So when does it apply? So if management decide that this asset should be sold in the foreseeable future, so normally, as I've said, within a year, then this asset will be classified as a non-current asset held for sale. And can you see, it will fall under your current assets. It will be sold within 1 year, but it is a separate category. It's now non-current assets, but it's held for sale. So it will be underneath your current assets, as it is something that you expect to dispose of within 1 year. Let's look at definitions that you can find in Appendix A. Non-current asset that does not satisfy the definition of a current asset. That is pretty straightforward. Probable is more probable than not. Highly probable will be significantly more probable than the term probable. Firm purchase commitment will be an agreement with an unrelated party, binding on both parties and usually legally enforceable. Then the cost of disposal in terms of IAS 36 will be cost directly attributable to the sale of the asset, excluding your interest or income tax expense. So cost of disposal you will only incur when you sell the asset. If we look at the scope, on what is the requirements of IFRS 5 applicable, the classification and the presentation will be applicable to all the non-current assets and the disposal groups. Remember this one, only in CTA. Measurement requirements, so at what amount should I have my IFRS 5 asset in my books? Those are applicable to all non-current asset and disposal groups classified as held for sale, except for deferred tax assets, assets arising from employee benefits, financial assets, and investment properties carried on the fair value model. So for these assets, they will still be measured in terms of their own standard. So for example, investment properties on the fair value model will be measured at the latest fair value and not in terms of IFRS 5. In the next video, we will look at the classification.